I can see that everyone is now joined. I'm really pleased to welcome you to this event on how professionals can support businesses to trade more overseas, particularly post-Brexit. First thing I want to say is we're recording this event, just so that you're aware, and we need to say that because we've got someone with some legal background on the panel, and I'll be delighted to introduce those in a moment or two. The event is held jointly between the MMU's Centre for Professional Excellence, the accountancy body, the ICAEW NatWest, and the Chartered Banker Institute, who kindly let us use our platform. So the event today, we're going to keep it to an hour. So even if we're going strong, I'll cut it off at 2 o'clock, just because I'm aware that quite a lot of people have nipped out at lunch to join us today, and we are very grateful for you to come along. Also, really pleased to introduce our panel today. We've got some experts in the field and a real range of expertise on international trade. So starting with Kevin Ledwith. Kevin works for UK Export Finance, and he's got real experience at helping businesses and finding the new tools so they can trade more overseas. We've got Mark Hughes from NatWest, a hugely experienced relationship manager. Mark looks after some major businesses in the Northwest and has got a lot of experience at helping businesses build up their trade profile. Kellie Noon from Onno, or Onno. I always get it wrong, but I think the way to remember it is we don't want to have many Onnos when it comes to international trade. And she'll talk through some of the cultural issues as well as some of the language issues that you're likely to face. And last but not least is Rick Canavan. And Rick has both legal expertise, but also practical expertise in his role as Head of International for MMU's Business and Law. So that's enough from me. I really want to concentrate on the content. I'm going to hand over now to Kevin. Kevin's going to speak for about 5 minutes, the same as the other speakers, and in about 1:30 we'll open it up for questions. So please feel free to put those in the chat box as you go through. So over to you, Kevin.
Okay, thank you very much for that introduction. Yes, as you've been told, my name's Kevin Ledwith. I work for UK Export Finance, which is the operating name of ECGD, or the Export Credit Guarantee Department. We are a government department, and we are the UK government's export credit agency. UKEF celebrated its centenary last year, and we have been around for a long time. Unfortunately, not too many people have heard of us or know what we do. Okay, our mission is to ensure that no viable UK export fails for lack of finance or insurance from the private sector. So what we're doing really is working where the private sector hasn't got risk appetite. We do this in 3 ways. We help UK exporters win contracts by guaranteeing bank loans, which allow attractive financing terms for the overseas buyers of UK goods and services. We help exporters fulfill orders by supporting working capital facilities with UK banks. We help exporters get paid by providing credit insurance in the more challenging markets where the private market is unable to assist. In the financial year 2019-20, we provided £4.4 billion worth of support to 339 companies exporting to 69 countries. 77% of the businesses we do support are SMEs. To qualify for our support, you need to be based in the UK and you need to be invoicing a company based abroad. And for most of our schemes, there's a minimum UK requirement of 20%. And all the exports need to be covered by an export sales contract. Okay. There's a number of specific products that we have, but they boil down into these 3 basic areas where we provide support for the overseas buyers. We call these buyer or supplier credits, and they're usually used where there's a difficulty with domestic financing. A bank, usually an international bank, can provide a loan for between 2 and 8 years, although for green projects it can be longer. And the exporter's paid on the drawdown of the loan. The loan covers up to 85% of the contract value. And UKEF provides the bank with a government guarantee, ensuring that repayment will be made helping the bank to reduce its risks and therefore the costs associated with it. The interest on these loans is generally based on Western interest rates, sterling, US dollars and euros, which is often much lower than foreign domestic interest rates. This scheme tends to be used for large infrastructure projects, for example, road building in Benin and hospitals in Angola. Although it can be used for the export of capital goods and services with a minimum value of around £1 million per contract. Okay, the second way we assist is export credit insurance. So in essence, export credit insurance is where an insurance policy is taken out in case the buyer defaults, usually through the company going into administration. But our policy also covers certain political risks and war. This policy can be up to 95% of the invoice value, and we need the private market to have said, I'm sorry, that we can't cover that particular buyer in that particular market before we can look at it. We need to be able to confirm the financial strength of the buyer. So it tends not to be applicable to some very small buyers abroad. And the premiums payable by the UK exporters on this based on the perceived risk. We can cover single shipments, or we can provide a limit to cover multiple shipments that's renewed annually. Okay, up until the start of the COVID pandemic, we were precluded from looking at rich nations, but we have a waiver and we can cover buyers in basically any jurisdiction at the moment. There are a few countries where we don't provide cover, but that's generally speaking, it's almost all nations apart from where there's a war. The third way we provide support is working with the UK banks. We provide export working capital facilities and bonding lines for companies. What I should say is the banks provide those, and we provide the bank with a guarantee for up to 80% of the facilities that's granted to cover a particular export contract. Since the start of the year, we have started to move away from the traditional UKEF support being on a contract-by-contract basis. And we've launched a general exporter facility, which basically just requires exporters to turn over 5% of their turnover as exports over the last 3 years, or 20% in any one of the last 3 years, to be eligible for our scheme. And in essence, that scheme allows banks to provide financing, and we provide the bank with a guarantee in case of non-payment or default by the UK exporter. And that means that the banks are more comfortable in lending to clients, and hopefully we should be taking that forward. There's a number of web pages that I could provide details for, but I think at this moment in time it's probably better just to give you just a general idea of how it works. So again, it's just a minimum, a maximum support of 80% of any facility. The maximum term is 5 years, and it's available via all of the major banks. Now, the major banks in the UK have access to provide this scheme without reference to the UK export finance, as long as customers meet certain criteria. We have to be careful that companies are solvent, and that's basically the main criteria from our point of view. It's a solvent company and complies with state aid rules. Okay. I do have an example of a live client we've been able to provide support, a company based in East Manchester, called Newland Engineering. They won a £390,000 contract with a Swiss buyer, providing conveyor belts for loading soybeans to a soybean refinery. Newland needed working capital to finance the scheme, and they also were requested to provide a performance bond. Now, normally they would request an advance payment, but the buyers were nervous of providing an advance payment because of the size of Newland Engineering. So in negotiation with the bankers, UKEF were able to provide a guarantee so that funds could be offered to Newland so they can provide working capital so they could buy the raw materials for the conveyor belts. And they were able to put a performance bond into place to cover the export requirements. Banks generally issue bonds and guarantees on behalf of companies. The quid pro quo being that the bank will usually take 100% cash cover for the issue of a performance bond or reduce the banking facilities that are available. So UKEF providing a support for the issuance of a bond means that the company can keep some working capital within the business. Okay, that was a very quick whiz through UKEF and what we do. There will be time for some questions at the end, but that's fine. And if you want to move on, Stuart.
Wonderful. Thank you very much for that start. And a couple of lines that struck me out of that is that, one of the core criteria is to make sure the business is solvent, which is not too high a benchmark. So that opens up to plenty. But the other thing that strikes me is back in the days when I was in the real world of banking, as opposed to in the academic world, your service was really applied to really big businesses. And what's interesting is now how it's available to a lot of much smaller businesses. Which is a really interesting change. So we'll get some more questions for you, and maybe if there are questions, feel free to put them in the chat box. We'll pick them up after all the speakers have finished, but particularly if you've got clients that are on the smaller side and you're trying to work out how to get into this, then now is a great chance to ask Kevin. Wonderful, thank you very much for that. Well, you mentioned some banks. You've already embarrassed Mark by mentioning Santander. I'm sure he'll want to get his own back, but now is a good time to hear from a banker who's actually doing this and working directly with clients, maybe to deliver even some of the schemes that Kevin spoke about there. So over to you, Mark.
Thanks very much, Stuart. Cheers. Hi, everyone. Great to be with you this afternoon. The department I work in at NatWest helps our customers to trade internationally. So that's in relation to both export and import activity. And I have a few thoughts to share with you today from that perspective. In a nutshell, I believe it's important that we continue to share our knowledge and keep our UK business customers up to speed with new developments. They're very busy running their businesses in what remains a very challenging environment, and we can't presume that they will be aware of everything that's happening in this space. I feel the expansion of the UK export finance offering is a great example of a significant development that could help many companies. And Kevin's presentation provided a really good overview of how that works and where it can help. We as NatWest do tap into UKEF support for some of our customers for a variety of reasons, and also flag some of their other services that don't relate to working capital, such as the export insurance policy that Kevin touched on. There are clearly a number of areas to consider when a company is looking at an export opportunity. And there are some key points that we highlight to our customers, such as the end-to-end timeline between incurring expenditure and finally being paid. That can be extended due to transit times, for example, and that can result in a borrowing requirement. So banks typically like to structure working capital facilities that are put in place. So having some specific trading activity to build a structure around, which might include contracts, purchase orders, shipping documents, invoices being shared with the bank, could be far more attractive to them than providing a simple overdraft facility or essentially a pot of money that can be used for different purposes. At NatWest, this can link to UKEF support being put in place for those facilities, as I mentioned, either for the cash funding requirement or in relation to trade finance services that we provide, such as bank guarantees, Kevin mentioned advance payment guarantees, and letters of credit. As the world moved to a more open account trading environment over the years, where companies trusted one another to make payment according to agreed terms, often supported by credit insurance, there was an overall decline in the use of these trade finance instruments. However, they remain very effective, and their use does pick up in times of volatility. And that's what I saw happen during the last 12 months. I believe that helping UK companies to understand how these instruments work and how they can look to use them proactively is an important part of the education that bankers in particular can share with their customers. These instruments have been deemed complex, I'm conscious of that, certainly when compared to payments that have been made by wire transfer between two companies, and maybe their potential benefits have been lost along the way. I feel this should be tackled through ongoing education and knowledge sharing with UK companies and sharing some of the activity that I referenced earlier. So the concept that I touched on around structuring facilities also applies here. A bank in an overseas country is more likely to put a letter of credit facility in place rather than a cash facility, as they'll be able to exercise control over what their customer is buying. So, for example, is it a product that is consistent with their day-to-day activities and business plan? And because they'll see the associated shipping documents passing through the bank's hands, they can check everything as it goes through and put the brakes on if needs be. That type of facility may also carry a lower capital cost for the bank, which in turn could mean a cheaper tariff for the company rather than borrowing cash in their country. So that end-to-end cost-wise could be the most effective option. Offering extended credit of, say, 180 days is unlikely to be an attractive proposition for many UK companies. However, if the method of payment is a letter of credit, then it may be possible to accelerate the payment after the goods have been shipped. In effect, selling that receivable and receiving a discounted value from the bank. This form of discounting is different from a typical invoice finance facility, as the funds are paid on a without recourse basis. The seller essentially banks that cash and moves on. Aside from bank services, we at NatWest also signpost the export-related support that's available from other organisations, such as the Department for International Trade and their onward links to the network of UK embassies overseas. It isn't particularly well known that the embassies may be prepared to contact local businesses on behalf of UK companies who are keen to trade with them. And I'm told that not many overseas companies refuse to accept a call from the UK embassy. Similarly, the value of a good freight forwarder should not be underestimated. Not only will they have knowledge of shipping procedures and documentation requirements at overseas ports, but they might also be able to assist with document preparation. So, for example, if an exporter is getting paid by letter of credit and they're not completely au fait with the process, the freight forwarder may be able to take that off their hands. So that's just a few thoughts from me in sort of 5 or 6 minutes. Thanks for listening, and do feel free to ask any questions that spring to mind. I'll try my best to answer them.
Wonderful. Thank you very much, Mark. Again, so some bits that you mentioned there are the fact that these products and the services that you offer there and Kevin gets involved in are linked to trust and become more necessary in times of volatility and no doubt when you go into new markets. The other thing that struck me is you said that they sound complex, but actually when you talked about them, giving businesses the ability to check what's going on, the fact that actually they can be used to get cheaper finance, the fact that you can leverage the strength of the banks in different places to lubricate the finance, actually there's some really great reasons why some of these services can help businesses. So thank you very much for that. That's given us a really interesting overview as to how that links together. Again, Mark's already asked for questions, and I think there may well be loads. So pop them in the chat box. We'll come on to them in a little while. But maybe for a slight change of pace, as I introduce Kellie to you. Kellie, less from the finance side, but more focuses on what are the language and the cultural issues that you come across when going into markets business outside of your own. So I'll hand over to Kellie.
Indeed. Thank you very much, Stuart. I'm just going to start sharing my screen. There's a couple of bits I want to share with you. Indeed, of course, when we are dealing with businesses overseas and we're trying to grow our global business, of course, finance is extremely important. But if you don't have the clients to work with, the finances, it's unnecessary. So what I wanted to have a quick chat with you about today is just talking about how we can start to engage with clients in target markets that we're wanting to work with, or how we can develop the relationships with the clients that we have as well to make sure that these relationships will continue to grow. And of course, we can carry on doing lots of business and making lots of money in these different areas of the globe. Now, there's a zillion different things we could look at, but I'm wanting to highlight today just two things, and they are communication. If I can flick through. So communication, of course, is one part of what we're doing, but as well, trust is another part of what we need to build in order to establish these working relationships. Now, when we start to look at all of the countries around the globe, of course, there's many differences which will impact the way that we do business with people. And we can start to group countries into different areas based on different aspects, just to get a broad overview. Of course, as we start to work with people in more detail, we'll need to niche down into certain areas that might apply to companies or organizations that we are working with. But this will just give you a nice overview of things to be careful with from a beginning perspective. Now, when we start to look at the way people communicate around the globe, we can pinpoint different locations on a scale between being very direct in our communication style and very indirect in our communication style. So what I've done is I've grouped a few different countries as examples into 4 different areas, so we can get an idea of where different nations might lie on this scale or on this spectrum. Now, if we look at where I've got high on the right-hand side, that would be a very indirect communication style. And what does this mean? So a very indirect communication style is where people generally don't give us all the information or all the details that we need. There's a lot that goes unsaid, facial gestures, hand movements, and everything else that goes with that. All of the non-verbal communication is really important. So of course, when we start doing business with people in these areas, we need to be very careful about what goes unsaid. No? So we've got in this group, I've given an example, India, China, and Korea. So lots of countries in the East would fall into this group. We've then got the next kind of scale up where, of course, non-verbal communication is still important, but less so. So for example, Spain, Italy, and Brazil, quite a lot of Europe will fall into this group. Then we've got the next grouping along. So now we're getting closer to what is a more direct communication style, where people are often blunter and will say things more clearly. Everything is communicated very directly. We've got in this group the UK, Denmark, and Finland. And the group of countries which are most direct with what they're saying or what they're telling us would be the USA, Australia, or Canada. Now, what impact does this have on us trying to build relationships or do business with people in these different areas? Well, knowing how they're going to communicate with us can help as well in terms of what we need to know and what we need to present to them and how we need to talk to them. We know if we're doing business with somebody in the USA that they're likely to tell us things as they are. Whereas if we're doing business with somebody in China, it might be more complicated to get the details that we really need. So when you're looking to sign agreements or negotiations, or you're trying to work out with them what things they actually want or don't want, what things are going to contracts, all the things that have been mentioned before, we need to know where countries fall on this scale to get a really good idea of what's happening. There's other implications as well for this. So a couple of examples that might just give us a better idea of what to expect. Imagine you're going over to Spain, you're doing business with people within Spain. Now, they can be quite blunt in the way they communicate things, and it can also seem quite rude sometimes. I've put an example here of how people might call a waiter in a bar or a restaurant. They just shout, "Listen, waiter," and wave their arms. Now, to us, that would seem quite rude, but it's understanding this is normal practice that things then don't become a problem, knowing the way that people are communicating with you. Look at the example of Germany. They might be asking you more questions. If you're going to do business with people in Germany, expect a lot of questions. Have your details ready. They're going to want to know your data. No, so preparing this in advance can put us in a better position when we are negotiating or talking to people. The last example I put on the right-hand side of China. Now, quite often in a lot of Asian countries, actually, it's very rude to say an outright no. So if we're doing business with people or trying to create a relationship with people, we need to be aware of this. We might be negotiating with them and hear them say, yes, but actually that yes, which is a little bit tentative, really is a no. So it's learning to kind of read around the lines and understand what is not being communicated or what's not being said, because they're trying to be polite quite often, but it can cause a problem in that communication and obviously ultimately a breakdown in whatever relationship you're building or whatever negotiations or deals you're working through. So understanding the communication style and how people do things can really impact how likely we are to actually get the negotiations or the deals over the line. Now, the second point I want to talk to you about is trust. And again, we can plot different countries on a scale of how they prefer to build trust or relationships with people. Now, we've got at the two ends of this spectrum, building trust with our head or building trust with our heart. Now, building trust with our head is what we've put on this left-hand side, low, so quite direct. Building trust with our heart is at the other end of the scale where it says high. Now, again, this can be really important. If we're building trust with people from a heart perspective, we need to know people more personally in order to actually do business with them, to enable that relationship to develop or grow. They need to know you as a person. So as we work through, again, I've put it into 4 different groups or examples, we can see that, we can see that there are a variety of different country groups. Now, those on the right-hand side in the heart group, so here, for example, India, China, and Nigeria, are going to want to build up a personal relationship with you before they will get down to business. And of course, this is important because you're going to need that to build that time into your planning, into your sales planning, into your business model, into whatever it is that you're doing to effectively start to do business with these different organizations. Things will take longer. And of course, that has a real impact on when the money's coming in, at what stage of the process you might be able to get things signed, etc. As we move further away from that end of the spectrum down to the heart end of the spectrum, things will slowly change. So working with organizations at the other end, the head end of this spectrum, people who will build trust with you immediately, we don't need to build in as much time as a general rule. Quite often you could go in and do business with somebody in the USA. They don't need to know about your personal life. They don't need to know who you are. They need to know what product you're offering and what the price is. And doing business with them is a lot quicker. So this will have an impact on what you're doing and how long it takes you to get things done. Another interesting aspect to think about is, of course, when we're building relationships with people and we're thinking about this time element, quite often some countries will jump in and say, yeah, we've got a deal, but actually that deal will later be a little bit more flexible and those details will change as we move along. This is quite typical of the USA. But other countries will take an extremely long time to get to the point where they sign a contract and agree something with you. But actually, once that's signed, it's a lot more fixed. And that will be quite true very often of organizations that are in this other end of the spectrum, the heart. So India, China, and Nigeria. Now, this is really useful for us whilst we're starting to build relationships with people and try and do business with them. And what we can do is when we look at further examples and different aspects of the communication is build a country profile. And this can help us when we're starting to develop those relationships or starting to think about working with a new target market or audience. So build a very simple country profile for the area that you want to work with. Think about where they are in the world, what their native language is. Think as well about how many people there are. Get a really good feel for the country, but then select elements that are going to be important for you. So I've put here just 4 points that we can look at. For example, teamwork. How important is that? Are people going to want to work en masse, or are you going to be dealing with people more individually? How direct the communication style is. So do people want to say things quite bluntly, or are you going to need to unpick a lot of what they're saying to really get down to the nitty-gritty of what it is that they're trying to communicate to you? How do they build trust, and how long is that going to take you? And they've put as the last example here, how much detail people are going to want. I briefly mentioned before, if you're doing business, for example, with Germany, quite often they'll want a lot more detail. They'll want to ask you questions. So going into the negotiations or trying to build that relationship with them, preempting that, you can give them the information they need to help secure that trust and build that relationship. Another example, just so you can see, have a look at those 4 scales at the bottom, how they change if we're dealing with China. Now, again, you can start to put this country profile, but look at how important teamwork suddenly becomes. You're more likely to be dealing with more people as opposed to an individual. As well, trust, extremely important. So if you invest time in doing that, you're more likely to do business with them. And as well, the detail. They want to know a lot more about what's happening. They want to know why you're doing something. If you're trying to get buy-in, if you're trying to persuade people to engage with you, give them that detail up front. Allow them to be confident in dealing with you and feel confident about talking to you about different areas. So that is a very quick thrown at you overview of those 2 different elements, communication and trust. I think it is really, really important that we do take these aspects into consideration, because of course, without this, without the potential clients, it doesn't matter whether you've got the finance or not. Okay, so it's something else that often gets forgotten until it's too late and there's an issue which we need to deal with. But actually building part of this information, this knowledge into the first initial stages of you doing business internationally, be that importing or exporting, can have a really positive impact on the outcomes of what you're doing.
Wonderful, thank you, Kelly. It's interesting that the word trust has come up quite a few times already today, but I was only reflecting as you were speaking. Very much the sort of the finance response to it is very much a head response. How can we structure products? How can we organise it? Can we get letters of credit? Can we get the bank involved? And these are probably all necessary, but there's that heart, that relationship side, that not miscommunicating. So that's a really interesting angle to take things from. So thank you very much for that. I so wanted to hear more. But speaking of hearing more, I'm going to introduce in a second to Rick. It's fair to say I've seen Rick both from an academic point of view, but I've also seen him in action internationally, because that's what he does for a living. And I suspect he's come across a lot of these cultural issues in his travels, trying to arrange contracts for the university and others. So Rick, over to you.
Thanks, Stuart, and just thanks to the speakers. That's been a really interesting primer, and particularly what you were saying, Kelly, about culture, because of course sort of the culture you're working in has a huge impact on the relationship that you have with the people that you're working with, but of course out of that relationship then comes an agreement. And what I'm going to talk about quite briefly this afternoon is how the agreement itself, and particularly the legal substance of it, can almost get a little bit forgotten about. Or alternatively, and particularly for those who are new to importing and exporting, the legal part can seem really quite mysterious and often quite remote. And it can even get forgotten about. If you're used to dealing within the UK, for example, the legal stuff is quite often very much part of the background. But when you're dealing internationally, it becomes very much part of the foreground. Now, of course, you can always, pay plenty of money for legal assistance. But what I want to talk about today, just briefly, is how you can, to some extent, really avail yourself of a degree of legal assistance. And I'm just going to just share with you a single brief slide when I can find it. There it is. Which hopefully just provides some, some useful prompts for you. And the first bullet point here, I think, really maps nicely to what you were talking about, Kelly, and I can think of particular countries where we're actually having discussions about hard detail and getting people to pin down to certain legal obligations can be really challenging. And certainly if you were to do that at the wrong point in time, you do potentially risk fouling the whole deal. But I think it is really important that once you've identified the correct point in time, you're not just happy with a handshake, essentially, that you are brave enough to have a quite detailed discussion about what the legal framework for the agreement that you want to reach is going to look like. I think first of all, it's really important to make sure that you have that conversation and find a space for it and really force the issue in there, because there are so many pitfalls later on which potentially arise from not doing that. I think that there is also a lot of self-help that people that are new to import and export can take advantage of. The first thing I think is that it's really important just to get to grips with the basic contract forms that are used for buying and selling of goods and services, and particularly in the case of buying and selling goods. Those are very much your friend because they have within them pre-packaged the obligations of the buyer and the seller. But it's really important that there's a conversation around that as well. It can be very easy, I think, sometimes to get a sense that the party you're dealing with, if they're more experienced, is going to have a really deep level of understanding about what an import or an export contract looks like. It's really important that you're familiar with the type of agreement, for example, an ex-warehouse agreement or whatever it might be, to be familiar with it and to understand what obligations are baked into that for each party, and perhaps to try and introduce that terminology quite early on, so it's potentially shaping your negotiations. Ideally, it wouldn't be an afterthought. But if you can, go into the the contractual discussions with that basic vocabulary and that basic idea of what are the options for apportioning the different commercial risks, you're immediately going to be in a better position. It's also very easy, I think, if you just work in the UK, to almost work with a degree of ignorance around, the fact that there is a whole sort of cornucopia of different legal systems, and that many of those legal systems differ not only in the way that they do or don't recognise what might be very familiar concepts to us, but also in the way that they deal with disputes. And the not just the way in which they deal with them, but the cost and the time which it might take to deal with a dispute in a particular place. Now, obviously, parties generally are quite keen to have disputes heard by what they consider to be a friendly home legal system. But that could have very, very serious consequences for you as an importer or exporter. And it could have very, very serious consequences. For example, if you're using a standard form agreement, which is perfectly fine in the UK, but which is now going to be looked at through a different set of legal eyes in a very different legal system. So that's a really important part of the discussion, and it's a really important thing to consider, I think, before you are very far down the road. If this does come to an agreement, whose law is actually going to apply for it? I think it's important also when you're thinking about export and obviously or import, and this would particularly apply obviously to goods rather than services, is really how the law conceives the different models of buying and selling internationally. And fundamentally, what the law is concerned with, and therefore something which you want to be concerned with, and this is as much about commercial risk as anything, is how are the ideas of property and risk moving? The law often sees import-export contracts really as being about just those two things, property and risk. But obviously for you guys who are buying and selling, those are not concepts which you're necessarily seeing the deal in terms of. So if you can sort of shift your thinking to think about where those two things are, where is the property and who is carrying the risk at any one time, that can really, and to try and map those things in advance, that can really help if things go wrong later. One of the real pitfalls of buying and selling, which unfortunately there is no self-help solution for, is that if things go wrong, the cost of getting redress can be very, very substantial. If you have a contract with someone overseas, even if that contract is clearly governed by English law and the parties have agreed that an English court can be the arbiter on it, and even if you're willing to spend the money to get to the point of taking that to court, there is the big question then of, even if you get judgment, what is going to happen next? Can you realistically get hold of any assets in a different country? Because that will be a whole other process at potentially even greater expense. So from a legal point of view, I think probably the most important question to consider, and again, this touches on what all of the previous speakers have raised, is, to what extent can you actually trust the other party if things go wrong? And of course, that is a cultural issue, a communications issue, a due diligence issue, and a finance issue. But I think if there's one, really important legal question, that's it. Because the reality is you want to keep these legal things in the background as much as possible. And if there's any way that you can avoid having to do that money chase overseas, then you want to be able to do that. So, of course, there is a huge amount of professional help available legally, but I think there are a few basic steps that particularly newcomers to import-export can take, to rearm themselves and prepare for the potential pitfalls that can arise with it. So I'll stop my share there, but thanks everybody. It's been really interesting.
Wonderful. Thank you very much, Rick. There's a couple of bits, again, that stood out, maybe framed by some of the other bits of the conversation. And again, it revolves around trust. You were talking around, can you trust the party? Because that implies the recourse. But the other thing that struck me, particularly after Kellie's section, is you were talking about forcing your way to make sure these issues are addressed, which feels a bit clunky. But I started thinking about, actually, if you don't, then trust is more likely to break down if there's disputes later on.
Yeah, that's it. And when I was saying that, Stuart, a particular example came to mind. So a friend of mine runs a small medical supplies business in the UK. And obviously over the last year, there's been an opportunity to actually get into PPE export. Now, they've never worked in export before. They're a relatively small scale importer, buying only from China. But the way in which the situation has developed in the UK is that because the government has been buying and distributing so much PPE, they and a number of other suppliers have actually found they've got a glut of it. So they've been looking to Europe, and finding buyers has been relatively easy, but and then doing a handshake on the deal, and it all seems so straightforward. After all, these are by and large relatively straightforward products, but suffice to say, this company sent a fairly substantial amount, about £500,000 worth of product to Italy in January, and they're still waiting to be paid. And there wasn't that discussion about, well, who is actually responsible for getting this through customs. The assumption was you would collect the goods and you would deal with it, and then we'd get paid. But that wasn't actually what the Italians had in mind. They saw this as being very much a joint venture, almost, well, you will put the goods on the road with us, and then we will do the rest, and you will be patient, and but there wasn't the willingness to really nail those details down. And the result is that actually the seller, who essentially thought they were selling on an ex-warehouse basis, has been sort of drawn into this, very long and sort of quite unwilling and acrimonious partnership with the buyer to help them get a buyer, to help them get through customs, and hasn't really had that hard backstop, that way of saying, right, categorically, this is what we agreed. And if you're not willing to comply with it, then this will be the consequence. So it's a hard discussion to have, and it's a hard discussion to have when everyone thinks that the champagne corks are about to pop. But it is absolutely essential, because the consequences for the seller, for example, are potentially ruinous, and they're now caught in a falling market. So there is quite a nasty potential downward spiral there.
Brilliant. That's really useful. That brings us nicely into the questions and answers sort of section. So it might be worth, in fact, one of the questions that we've had, you might want to keep this in mind, Kellie, because I think it was directed at you, is, when we're dealing with clients that don't speak English as a first language, is there any way to make sure that you've understood? And maybe if you want to frame it in terms of that situation with Italy that Rick's just described.
Definitely. I think the linguistic aspect of doing business internationally often gets forgotten, because luckily and unluckily, depending on how you want to see it, most people speak English. So when you are doing business internationally, quite often we tend to just do things in English, and we take for granted that the other person, even if they don't have English as first language, can communicate everything they want with us. And often very naively as well, we think, well, if we speak more slowly and more clearly, they'll get what we're saying. But actually, we have to really consider what it is we're saying in the language that we're using. So if I said to you today, for example, I'm going to give up smoking, which is a lie, I don't smoke. But if I say give up smoking, that combination of give up is a construction that other languages don't have. And it's actually extremely complicated for non-native speakers to understand. So we need to modify what we're saying and say things like, I'm going to stop smoking. And actually learning there's kind of 4 or 5, I suppose, important factors that we can effectively and very easily change, and it can immediately make sure that communication is clearer. And of course, then any misunderstandings are reduced. And that can have a huge impact on things like what Rick is saying. I mean, of course, there are cultural elements that fall into that, as well as how are things normally done, who will take responsibility for certain things. But if you can get the linguistics clear and correct, you're immediately making it a lot easier to navigate those challenges. Oh, I can't hear Stuart. Is it just
That's
me?
because I'm on mute. I knew it would happen at some stage. No, I just reflected on the fact that the linguistics and the clarity of those, that the legal aspect follows that. So the two are very much interrelated.
Rick's seen a lot of this.
Indeed. In terms of the questions, the other thing, I think we've had a few questions in the chat box, and I can see that Ian asked a question before that Mark sort of jumped in and answered. But I thought it was so interesting. I might just put it to you again, Mark, so that everyone can pick up on it. Ian asked, what's the panel's view on the rise of fintech and how it can impact on export finance processes efficiency, so blockchain and letters of credit and that side of things. So Kelly, we believe that I'm not going to you for that one, but Mark, you've put some comments in already.
Yeah, I absolutely do see this taking off moving forward. It already exists, and some of the very large companies around the world are making use of it, but it's still quite niche. I see that picking up pace over the next few years, whereby everybody in the supply chain, including the banks, will in effect be making decisions based on data that is verified, rather than checking physical documents and moving money on the strength of documentation. So it's a really good question, and certainly very topical.
Wonderful. Yeah, Rick, did you raise your hand on that question? I just noticed you raise your hand.
No, I was actually just coming back on Kelly's previous point, Stuart. Just to say that I think, sorry to divert. I think one thing, and I don't know if you'd agree with this, Kelly, is obviously your area of expertise, is almost to sort of to listen to yourself speaking more. I think makes a big difference. That's certainly what I try and do, and really deconstruct what you're saying to think whether it really makes any sense in the ears of anybody who isn't a native speaker. Sorry, Stuart, that's slightly off topic.
Well, on topic, absolutely, and maybe the partner, lots of paperwork flying backwards and forwards doesn't help. So getting some clarity maybe does make sense. So again, and there's a question coming from Emma Rima, and I'm going to go to you, Kevin, but feel free to say if you don't get expertise in this, because this looks like quite a toughie. I'm wondering what the cost of the Evergreen vessel was stuck in the Suez Canal established, and what are the insurance lessons from an insurance point of view. So Rima's asked a tough one there. I don't know if you've got any comments.
It's interesting. It's not my area of expertise, but if you actually think about it, there was 20,000 containers on that vessel. If you talk about each container having goods in them worth £50,000, and there's 450 ships backed up, there's going to be a huge financial implication. I think the biggest issue is really bottlenecks, because they didn't just occur at the Suez Canal, and they weren't. It wasn't resolved by freeing the vessel, because all the ships that were waiting behind it, in front of it, had to get through, and they were all turning up at the points of destination at the same time. So nobody could get into Rotterdam. There weren't enough berths and that type of thing. But I think, generally speaking, it's been resolved. Just off the top of my head, I remember reading some news stories saying it was the cost is between $6 and $10 billion. But if you go back to what Mark said before, the biggest issue is the delay. Somebody's had to pay for the delay. And if you've got 20,000 containers on one vessel that haven't been paid for yet, it's the sellers that are standing that financial cost. Okay, each container is going to be different. Somebody's going to have paid for it at a different time. But yeah, at the end of the day, if you sit down and worked it out, it's going to be huge sums of money. But it's only really delay costs. Is there a way of getting around delay costs? Can you insure against delays? To a certain extent, but not. I think it would have been called deemed a force majeure, and insurance companies wouldn't have paid out because there would be no actual insured loss. No goods were actually lost. I believe the vessel's been impounded as well. I don't know whether it's been released yet, but yes, there are delay implications, certainly.
And a lot of businesses with a lot of cash tied up in it. Rick, did you want to come in on that one?
Yeah, I was going to say, I think you're right, Ken. I think a lot of the loss, or the direct loss at least, will have fallen on ship owners and charterers. There's then a question about whether or not people like Maersk and DFDS will then seek to pass that on, as there probably isn't really an obvious insurance solution to this. As you say, you know, while obviously there are significant delays for people who've got goods that are afloat, actually, you know, there's almost as much cost in sending a vessel of that size, you know, all the way around Africa and to Europe. So I think ultimately this will probably actually be cost that is borne by you know, by those who are using liners.
Yeah.
Which we can sort of talk about quite quickly, but if you're a small business and you've got a lot of cash tied up in this, or your overdraft or your letters of credit or whatever lines you've got, it can really hurt, can't it? My goodness. We've had another question here, which I'm going to turn to Mark, because this might enable you to sort of carry on with where we're sort of looking at the sort of fintech side of things. You know, are you aware of any developments coming down the track, banking-wise, that will assist UK companies when trading internationally?
Yeah, that absolutely fits into the technology piece, Stuart. Definitely. I think that will be the next major change that we see coming down the tracks, the broader adoption of the latest technology, not just by a small number of banks, but by a large number of banks and large shipping companies, etc., as referenced by Rick earlier. So that's probably the key one that springs to mind.
And a large number of banks means that the system can pick it up as well, I guess, absolutely. And a question here, which has just disappeared. There you go. Alan's asked, how often do you come across the need to consider language communication skills with a client you're working with? And he'd be interested to hear about comments on when this dialogue should take place. Should it come before finances and contracts and sales are agreed. Let's go to Kelly for that one, because that's in language space. What are your thoughts on that?
Yeah, I was just typing back to one actually. If there is any linguistic issues whatsoever, they're going to need to be dealt with immediately right at the start of the relationship, or you're never going to get to the point of agreeing a contract, because of course there needs to be that communication. It needs to be an easy communication. But a couple of the points I made to Alan were, of course, this needs to be considered even if you're dealing with people who have English as a first language, but are from a different country. Dealing with people in the United States and Canada and Australia, for example, they will communicate things in different ways as well. So we all need to be aware of the linguistics and how we're communicating things. It just becomes more apparent, of course, when there is a second language coming into play. If you're doing business with, for example, the example Rick was talking about before, dealing with Italy, well, what was the common language that they used? Did people assume that just because they're speaking English, everybody speaks perfectly? Were there translators and interpreters involved? What kinds of things might help you to do that? One thing we can all do to empower ourselves is look at how we learn to use international English and taking it upon ourselves to learn a bit about how we communicate and what we can do to make ourselves more actively, clearly understood. Yeah, it'd be really interesting to hear other people's experiences, though, to see what people have experienced, if they've had difficulties with this and when that's come up.
Rick, I'm sure you've had some experiences overseas in different jurisdictions with that. You want to come in?
Yeah, no, that is a really interesting one, because I think it's quite a difficult discussion to have in a way about what is our common language. And again, it's very much about cultural attitudes. I think that yeah, certainly a lot of British English speakers would culturally not want to put someone in a position where they felt uncomfortable about the level of their English, so wouldn't perhaps be willing to ask, you know, are you able to understand me? You know, is there anything we can do to make this easier, and things like that. Yeah, it's a really difficult one, Stuart, because I think it is very much about listening to what you're saying, thinking how that lands, how that's going to be heard, and being aware of that sort of international English as well, Kelly, I think is hugely important. And then there's an interesting dimension here as well, I guess, about, particularly on that Italian deal, for example, the role of Google Translate, which is everybody's friend and nobody's friend. You know, I think there's probably a really good lesson for anybody doing this to type something, put it through Google Translate into another language, and then translate it back. And that actually is often the conversation that you're having face to face with somebody. And you know, what you're saying is not what's being heard, and not what's necessarily coming back. So I think it is one that you just sort of have to navigate with each individual interaction. But I think the key thing is just to be so much more aware of what you're saying than you would ever normally be if it was a conversation with another native speaker. You're muted, Stuart.
Is that one of the key conversational issues that I need to learn in different speakers? Yeah, thank you. In terms of the title talked around so post-Brexit. So I guess we've had a few months where we've definitely been out. I know there was a year difference, but I guess looking from a finance point of view, Mark and Kevin, maybe Mark first, what are the trends that you've seen in businesses in the last few months in terms of the financial needs and what's happening with trade?
There's a couple of things that spring to mind, actually, Stuart. So one was companies reappraising their supply chains. And that was before Ever Given and what happened there. So that was getting more focus and maybe bringing things closer to home than companies had done previously. And the other angle to that is I've started to see some element of reshoring. So UK companies who are now buying machinery to be able to produce goods themselves rather than purchasing them. So they might well be buying that machinery from overseas, and we assist them with that. But that's a marked change that I've seen coming into the early months of this year.
So if anything, slightly less trade going on by the sound of that.
But potentially in certain areas, and depending on the sector and the product that's required. So I have seen that change. So it'll be interesting to see where it goes from here.
And Kevin, you see this from a slightly different angle. What are you seeing?
Yeah, I mean, from a work perspective, we've seen an awful lot of problems with the UK food exporters, especially the fish sellers. We have provided some credit insurance policies for them, and we're having a few difficulties. And obviously, it's the companies that are having difficulties with the paperwork. But we've got cheese manufacturers as well who are having huge amounts of problems. You can't sell on the internet anymore. And it means you really have to redefine how the business operates, and it's really all problems that weren't really foreseen, and it's only when all the rules clicked into place that the issues were compounded. We're also seeing an awful lot of companies setting up operations in the European country, lots in Belgium and the Netherlands at the moment, and potentially that's a way forward. The bottom line is they're not going to be UK exports going forward. So we'll see what the figures say in a few months when things do settle down about what the actual change in the UK EU import-export dynamic has been.
So the sort of last two comments there indicate a bit of less trade, some offshoring, some onshoring. But hopefully during the discussion, we've illustrated quite a few different ways that businesses can improve financially and culturally and trust-wise how they can improve trade. So it's coming up to 2 o'clock, and I promised that we would culturally and stick to what we said and be direct and finish on time. I just want to say a big thank you to the panelists have given up their time today. So Mark, Kevin, Kelly and Rick, really appreciate it. I know that in the materials we sent out, your contact details were there on LinkedIn, etc. So if people want to get in touch and get further advice, then please reach out. I think you've seen that they've got some real expertise there. I want to say thank you to the ICAEW, and Claire in particular works behind the scenes on that side. And a special thank you today to Heather, who does all the work behind the scenes for the Chartered Banker Institute, who is moving on to other roles within the Chartered Banker Institute, including working on the Young Banker of the Year programme. But it means that she won't be working with us in the future. So she's been marvellous over the time. So thank you very much for all your support, Heather. It's really appreciated. So thank you to the panelists. Thank you for everyone for coming along. Hope that's been useful. We will publish the video. We look forward to seeing you next month on the 19th, where we'll be looking at fintech and banks, whether they're cooperating or competing with each other. So thank you very much, and we look forward to seeing you again. Thank you. Bye, everyone.